Planning is key to successful investing. That's the bottom line. In this short podcast, I want to share with you top 6 steps which I follow in my investing journey and how it has helped me. I'm going to share that. When I set up a plan, it helps me to understand what is the right investment I should go and focus on it. It also helps me to find out my time frame for that financial goal. Then associated risk tolerance will also be coming as one of the core factor which comes out of that process. It helps me to reach to my financial goal because every investment I tag to my financial goals, and that way I can track it clearly. So it is very very crucial that you need to develop an investing plan. I want to share that how I do it so that it can benefit you in any way. Before we progress further, I want to give you a clear disclaimer. I am not a financial advisor. I have no qualification to be a financial advisor. I'm just sharing based on my learning, my experience, last 15 years in stock market investing in various products. Please do consult your financial advisor for making any financial decisions. Let's start with first thing. What I do is I review my overall finances, where exactly my investments are, what is my current financial situation, what is my net worth. There are various net worth tools available. You can go and search on Google, but overall you need to see how much a bifurcation you have in in my country called super, whether it could be provident fund in India, it could be something else in your country. Then whether you have a home, savings, other investments. So you need to make a list of that and understand how much debt you have, how many credit card debts you have. So you basically understand and review your finances today and where you stand today as a net worth. That's the first step I do. Second step is then what are my financial goals? What do I mean by that? It is more about understanding what is the immediate need of goals. Could be for holidays, or for could be for retirement. It could be for going for a holidays post COVID, or could be for the car, house, and anything. So you look at it. What are your immediate goals? Could be for education, post graduation, and so on and so forth. So you tag them in a bucket of how many years it could be, like 0 to 2 years, 3 to 5 years, or 5 years plus. So which I classify them in short term, medium term, and long term. And if those are your needs, from the first step to second step of setting up your financial goals can give you that clarity where exactly you should focus on. Then comes in what should be the risk profile you should do. What is your investment risk to achieve that goals? Let's say for example you want to invest in house for next 2 years. You don't want to go and invest in stock market saying that you can achieve that objective, because stock market going to be very volatile and it can create a lot of challenges for you if you need to achieve that goal. Likewise, people do. I've know my some of my friends, they invest in cryptos thinking that they can buy a house when that particular crypto goes up 100% or 200% or whatnot. So you need to understand that that's unreasonable expectation. Understanding your investment risk is the key, and there's so many risks associated with the investment. It could be interest rate risk, market risk, sector risk, currency risk, liquidity risk, credit risk, and so on and so forth. So you need to understand that there is quite a bit of a risk if you have an immediate need for next 5 years, and that way stock market is not the place for your investment. You should stay away for investment, and that's how I do it, because you don't know how market can turn. So any money you need within the 5 years time frame, which is the medium term, you should I avoid putting that money in stock market. Then you understand what is the risk and return you get. Like for example, if you keep it in cash, it can be very defensive asset, but obviously you're not going to get great returns because there's no risk involved there. Very minor risk, or could be fixed interest if you're investing in bond and so on and so forth. As you go higher up, like property, shares, or alternative investment like paints, or people are investing in arts, or some of them are investing in sporting teams and so on and so forth. Those are growth asset, and then obviously expected risk are also higher. So if you understand the risk and you can mitigate them, then yes, that's a place to be in. And I find it, the way I do it, I teach how to invest in stock market through my own approach called Peaceful Weekend Investing, and I'm building an amazing community. Go and check out. I'll leave the link below. You should jump in and be part of my free Telegram channel, which way I keep sharing a lot of information. Let's move on. Then once you do that, basically you have so far understood your finances, you understand the financial goal, you go into understanding your investment risk associated with the various products. Then move on to it. You need to start researching on your investment options. You research, you understand what is the different time frames, return profiles, when you look at the liquidity you get, and then you basically also understand what is a tax implication, how much it costs to buy and sell, and so on and so forth. You do a research on all the options and put it all together in piece of paper, so you have at least have the clarity. Number 5, you then start building your portfolio together. Whether if you decided, okay, I'm going to invest this much percentage in cash, this much in bonds, this much in managed funds, and then there are certain funds I allocate for direct equity, or there are certain funds I'm going to put it in crypto, which could be high risk returns in terms of a long term portfolio. So I kind of keep it simple. I divide into two portfolios. One is being short term, and one is for long term. And specifically in stock market, typically I keep it one long term portfolio, which are stable companies, which are long term compounders. And then I have a lab portfolio, which I call it Peaceful Weekend Investing Lab portfolio, where I do a lot of research around that. Let's move on to number 6, which is monitoring your investment. That's the last part. You have to monitor it. And I typically I have a set time which I do monitor. For every short-term investments, I monitor in stock market every week as part of my weekend process. But otherwise, I look at it for quarterly or monthly basis only. Otherwise, for if you're investing in property, then it's a kind of you review that every year. And only way we want to track your investments are the ones which are in high risk category. Hope you find this useful. I just wanted to share this top 6 list which I follow as part of my plan. Let me recap. First one is understanding my finances. Second is what is my goals, what are my financial goals which I can associate with it, and break that down in short term, medium term, and long term. Then goes into what is the investment risk for each product, and based on the risk I then take the decision of how I build my portfolio by looking at each and every investment options there and then track that portfolio. If you're liking my content, please consider subscribing to my channel. I keep bringing new videos every now and then. Hit the notification bell so you get notified my next video. And if you're liking the content, hit the thumbs up so that way it encourages me to make more such videos. Shivant Bhatia here, signing off now. See you. Bye bye.